Alright, what's good YouTube? It's your boy FOREX here, and today I'm bringing you guys a very strategic video as far as how to use the best indicator for scalpers. In my personal opinion, this is the best indicator as far as scalpers. Okay, so I'm using the 200 EMA. Is this yellow moving average I have here. Okay, so for those who do not understand how to use the 200 EMA, this is basically an indicator that helps you determine the overall trend of how the market is moving. Okay, so I'm going to show you guys how to first put it on, and then I'm going to show you guys how to use it. So you want to go here, you want to type in 3MA, the letter MA. Now I can't do it because I have my hotkeys set for it's gonna stop the recording like if I type the M. So you want to do it, then you want to go to the settings, you want to put 200 close EMA, and then of course you can put whatever color you want to. I just have yellow just because I want it to be yellow. Okay, now first things first, what I'm about to show you is not 100% guaranteed. Like there's no 100% win rate. Okay, secondly, when the 200 EMA is crossing underneath how it is like this, it's indicating that you're on a strong bullish trend. That's all it's indicating. When it's crossing through the candlesticks how it is here, it's indicating that you're in kind of like a consolidation. There's no clear direction of the market. It's just consolidating. Now when it's crossing underneath like this, when it's crossing above like this, it's indicating that you're in a strong bearish trend. Okay, so keep that in mind. When it's crossing through the candlesticks, you're in consolidation. When it's crossing underneath, you're in a strong bullish trend, and then when it's crossing above, you're in a strong bearish trend. Now there's gonna be people. Now let me say this too, I'm not against trading naked charts. When I mean naked charts, I mean like no indicators, like you're just basing it straight off of pure price action, just the candlesticks, that's it. Now the thing with me is that I believe that indicators help us retail traders like become more profitable. Now I'm not saying like put the divergence, put Bollinger Bands, put the 200 EMA, put all these moving averages all over the screen. You see I have my fib points. I don't need this. It's just that I was also I'm gonna also record my understanding market structure video. Those are the only reason why the Fibonacci points are on. And then also I also trade a lot of Fibonacci as well. But basically, like, I'm not against naked trading, but some people trade very blindly as far as like naked trading. That's why I like using, for example, the 13 EMA, the 200 EMA, because they help me leave runners, and then it helps me understand the overall trend of the market, even though I fully understand market structure. So with that being said, let's get into this. Okay, now also let me say this, I don't remember if I said this already at the beginning of the video, but the 200 EMA, it's best when you look at it on the 15-minute time frame. I say that because you get a mixture of all the other time frames basically. Like say if I deleted this section right here, you'd see on the 1 hour it's on a bearish trend. Okay, because all of these candlesticks are a couple blue candlesticks on the 1 hour and the 4 hour and stuff. Okay, but let me show you the reason why I say not to take a setup when the 200 EMA is crossing through the candles. Okay, so here we have market structure break from this high to this low. It's breaking these lows. Okay, like I said, I'm currently in the process of making my understanding market structure video, so be on the lookout if you do not understand market structure, or if you're just a beginner, whatever the case is, I'm here to help. Okay, actually, before I even also get into the video as well, please leave a like and a subscribe as well. It definitely helps. But let's get into it. So I take my fib from this high to this low, and what happened? It hit my golden zone, and then it kept going up, and it tapped me. Now I know somebody took this fib short. The reason why I'm pointing this stuff out is because I'm trying to help people that when you take a setup when it's crossing through the candles, you're like you're gambling at that point. Like, are we gambling, or are we trying to sit there and become profitable traders? You know what I'm saying? So I've been stopped out a lot of times before I even knew about the 200 EMA. So it's like I said, are we gambling, or are we trying to actually sit there and become profitable traders? Okay, so like I said, I know somebody took this fib short from that high to that low, and then they got destroyed. They entered right off these golden zones and they got destroyed. Okay, so like I said, please do not take a setup when it's crossing through the candlesticks. Now I have one setup here. I have to find it. It's right here, where the trade actually played out. Now, this is why I asked earlier, are we gambling, or are we trying to become profitable traders? Because you're taking, like, this setup right here. Let me show you guys. You see how the 200 EMA is crossing through the candlesticks? This is what I like to call a low probability Fibonacci play. Although the trade played out, it doesn't mean that it was a good setup to begin with, because like I said, there's a difference between low probability and high probability. Us as traders, we want to try to take high probability literally 99% of the time. Okay, so you go from this high to this low. Okay, you can see the fib points. Now it came back, it was kind of playing around a little bit, then it came back, hit your golden zones, and then TP1, TP2 were smashed, and then of course, if you don't take profit, it comes back and destroys you. This is what I'm trying to get at about a low probability Fibonacci setup. You have no confluence there. Yes, the trade played out, but like I said, the 200 EMA is crossing through the candlesticks. There's no clear direction there. Okay, there's just no clear direction there. That's a setup that you don't want to take. You know what I mean? Even right here too, someone took this fib short and they got destroyed. Now let me show you the reason why they got destroyed. The 200 EMA, there's no gap. There's no gap. There is, but not really. Like, okay, when you go here, do you see how there's like a major gap between like the fib points and the 200 EMA? You want to have that gap because it shows that, of course, you're in a stronger trend, but it leaves you some breathing room. Okay, this is like is damn near about to touch the 200 EMA. So although it's above it and it's telling you that it's on a strong uptrend, somebody took that fib short just because of the fib point. Someone took that fib short. I'm telling you, y'all gonna learn today. Somebody took a fib short and got destroyed. The 200 EMA is indicating that it's on a higher, it's on a bullish time, a bullish trend. Now, like I said, someone took that fib short and got destroyed. But like I said, something else you want to also look for is that gap whenever you're back testing. You want to be able to look for that gap between everything. Okay, so for example, right here, okay, took from this low, say, to that high. The trade played out, hit your TP, pulled back, hit your TP1, TP2, TP3, and then it just continued to melt to the upside. Okay, even here, some people are counter trending and they're taking these fibs short. Hit your TP, hit your TP, hit your TPs, hit your golden zone, hit your TP1, TP2. These are what I like to call low probability setups, because you can take these Fibonacci shorts, but if you don't get out fast enough, you will get destroyed. That's why I say you can counter trend, because like I said, the 200 EMA is showing right now that it's on a bullish uptrend. You can counter trend, but you want to get in and out of the market. Like, there's nothing wrong with counter trending, but like they say, the trend is your friend. So you want to trade with the trend, basically. That's just how it is. Even here, it's indicating it's on a slower bearish. It's indicating that it's on a slower bearish trend. You came here, broke structure to the upside, pulled back, hits your golden zone, hits your TP1, almost hits your TP2, and then it just kind of starts consolidating, and then just boom, just completely melts to the downside, stops you out. That's why I say always look for the gap. You see how this gap, there's not really much of a gap here between there's not much of a distance gap between the 200 EMA and the candlesticks and the wicks. There's no real gap there. So at that point, you're also taking a gamble. Whoops, I didn't do that. Like I said, you're taking a gamble at that point. I want to find some like bearish fib plays. Even right here, look, this is a perfect one. Let me let this be known right now too. I don't need these fib points, by the way. I trade fib all day long. I don't need these fib points. I only do it to help enhance the video, okay? Or you guys. You see how there's a huge distance between the 200 EMA and the wick? Same thing here. You take the fib short from that low to that low, hits your golden zone, you're in a little bit of drawdown, and then all of a sudden it just melted to the downside. TPs were smashed, okay? So these right here are these high probability Fibonacci setups. Not to mention GJ throws a lot of fibs. Those are those high probability fib setups that you want to take. You know what I mean? Like with the gap and then market structure break. Those are the high probability ones you want to take. Even right here. Now this is what I was trying to get at the beginning of the video. Most setups, just because there is a gap, that doesn't mean that, again, it's a 100% win rate. Look at this trade. You go from that high, from that high to that low. It hits your TPs, you wait for the pullback, it kind of starts playing around, and then it stops you out. And then it goes in your direction. Like that, look at it. There's a gap between it. So there's a gap between the 200 EMA and the physical Fibonacci. Like I said, somebody is losing. When you're winning, somebody else is losing. Someone took that sell, even though they didn't really there wasn't really anything there, but someone took that sell without realizing that the real move here is a buy. I know it's kind of confusing because it's showing that it's a downtrend, but like I said, you can counter trend. You can take counter trends. The only thing is you have to be in and out because there's market structure being broken on both sides. But of course, if you look left, again, when my course comes out, you can see that there's an area right here that have to get filled. So if they already filled to the downside and grab liquidity to the downside, they have to shoot back up. So this is a high probability setup, but it just didn't go in your direction, to be honest, because like I said, hit your TPs, you wait for the pullback, it kind of starts playing, and then it just taps you. So this is a trade where we kind of have no control over it. I mean, but like I said, if you could see the area to fill and the market structure being broken on both sides, you can then understand that, okay, the real move here was the Fibonacci long, not the Fibonacci short. Even though the 200 EMA is showing that it's on a bearish trend. Even right here, you take from this high to this low, you hit your TPs, you wait for the pullback, gives you multiple entries. 2-3 candlesticks later, TP1 hit, it kind of goes right back up to your entry points. It gives you another entry, 2 entries, and then just melts to the downside. And then not to mention, there's liquidity sitting there. If you haven't already watched my how to spot liquidity video, please do so. I've gotten stopped out a lot of times during my beginning stages because of like liquidity grabs. Even right here, GJ throws a lot of fibs. I'm telling you, it's just golden nuggets I'm giving you guys. Ready? From that high to that low, pulls back, hits your TP1, pulls down, hits your TP1, pulls back, hits one of your entry zones, hits the 38.2 fib zone, and just melts to the downside. TP1, TP2, TP3 smashed. And then like I said, again, look at the way the 200 EMA has a gap. Again, nothing's guaranteed. I hope you guys are understanding that nothing is guaranteed in trading. Nothing is at all. But like I said, when it's on a downtrend, it's going to be above the candlesticks, like how it is here. When it's going through the candlesticks like this, it means it's on consolidation. And then when it's above the candlesticks like this, it means that you're on a strong bullish uptrend. But with that being said, I hope you guys gain some knowledge out of this. You want to be able to backtest this because like I said, You saw the examples I gave you guys. Some people are trading naked charts and they're getting stopped out without realizing that the 200 EMA is it's crossing right through the candlesticks. So, and like I said, just because you win a setup and the 200 EMA is crossing right through the candlesticks doesn't mean that it was a good setup. You're gambling at that point. I'm gonna be honest. I'm gonna be straight up. You're gambling at that point. But with that being said, I hope you guys gained some knowledge out of this. I hope I was able to help somebody. Like I said, just go back and back test this properly. But with that being said, I hope you guys enjoy, man. Peace and love. I'm out.